As you can see right here in one of my long-term portfolios, I've been purchasing at least one share of SPYI every single day for the last few months. Now I plan to keep purchasing a ton more SPYI over the next few months and build up a sizable position because I'm extremely bullish on this ETF. Now in this video, we're going to dig a little bit deeper into SPYI, the NEO's S&P 500 High Income ETF, and I'm going to share with you guys exactly why I'm so bullish on this ETF and share with you some important insights and some numbers when it comes to this income-oriented ETF. So if you would consider yourself a dividend-focused investor looking for a high-quality income-generating vehicle, make sure to stick around, drop a like down below because you are not going to want to miss this. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, let's head over to the NEO's website, dig a little bit deeper into SPYI, explain exactly how this ETF works and why I'm so bullish on it to the tune of buying multiple shares of it every single day ongoingly. Now to dig a little bit deeper into how the SPYI strategy works, it says right here, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to of course generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEO, so the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now number three, this is also one of my favorite parts about this ETF, and this is another reason why I really decided I'm going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now, I thought this was also interesting and insightful. If you were to stack up SPYI next to some of the other high quality, keyword there, high quality, income oriented or income generating ETFs out there, and look at things like total return, yield, etc. All the way at the right, we have total return year to date, and this is SPY is up 28%. It's very hard to outperform SPY, of course. But coming in number two at almost 19% total return, SPYI with 12.1% of that being dividend yield. Now right behind SPYI is one of my other favorite holdings. We have Devo, and then we have JEPI, and then behind that is XYLD. But it is just sort of interesting stacking up SPYI next to some of the other high quality, more popular income focused ETFs and see how they've all performed as far as total return goes, at least during this time frame. So now that we dug a little bit deeper into SPYI, we understand how it works, and I even showed you the performance of this ETF compared to some of the other high quality, more income oriented ETFs out there. Some more reasons on why I'm extremely bullish on this ETF long term as a more dividend growth but yet income focused investor like myself. Now everyone loves high dividend yield, everyone loves dividend income, but nobody likes an abdicate. No one likes to see their stock or their ETF decay in price over time, all along while paying them a massive dividend over time. Now, at least so far, it might be too early to say, but since about August 2022, SPYI is traded basically flat, which in most cases that would be an absolute failure. But for a more income-oriented ETF like this one that's paid a substantial amount of dividends every single month to investors since inception, I wouldn't say that's bad whatsoever. Now, what I mean by this and what I'm going to show you here in a second is there's lots of other more income-focused ETFs out there that although might pay 10, 12, 14% yield per year, all along while some of these ETFs decay and decay and decay in price, making your total return much lower. Now, an easy example of this is QYLD, down around 30% in the max time frames. So even though an investor that bought into it here, or here, either way was paid a ton of dividends along the way, their overall total return has definitely disintegrated because of the fact the ETF price is worth just a little bit more than half of what it started off with back around 10 years ago. So with SPYI, at least so far, we're not seeing any massive signs of NAV decay. And in my opinion, this is because the management deploys the option overlay along with buy and call options when it makes sense. Now at this point, we're sort of getting into the weeds, and I really don't like talking about taxes all that much on my channel because I think that taxes are such an individual situation that can be so different, determining many different factors, but also looking at things like this right here. Just for an example, it is in connection with the monthly dividend payment of 47.5 cents per share that was paid back in January 2023, just for an example. It shows that 94% of such dividend will be return of capital. Now, return of capital is going to be taxed differently than ordinary or non-ordinary dividends, etc., etc. And like I said, I'm not going to go super deep into that, but just know that SPYI could be a perfect ETF with a great tax strategy for your portfolio, depending on what your needs and wants are. But now looking a little bit further into my own strategy with SPYI, in case you guys are curious, I want to share what I'm planning on doing. So because SPYI more or less pays around 50 cents per share for every single share that you have on an ongoing monthly basis, more or less of course. Every single day, if across my portfolios, I'm able to buy say 2 to 3, maybe 4 shares of SPYI on average, that's adding between $1 to $2 per day of forward monthly income to my overall dividend portfolio every single day that I purchase, let's say 2 to 4 shares. Now, if I were to be able to do that over a month time frame, if I'm able to add, let's say 2 to 4 shares every single day, every single trading day that is, I'm going to be able to add $20, $30, $40 of forward monthly dividend income on a monthly basis, all along while having potential upside on top of that. And that's even though a lot of these covered call style ETFs don't have all that much potential upside. Like we've seen with JEPQ, it's definitely possible. And with SPYI strategy, I think it's also going to be very possible. We're going to see some upside as far as price return goes. But either way, like I said, even if this ETF trades sideways, I'm still happy. So my strategy moving forward is to continue to add to more and more to my already 390 shares of SPYI, which I currently own at around $48, $49 per share on average, and keep building up this position until it's probably somewhere near 500 or 600 shares. Now at that point, I'll be earning around $250 to $300 every single month in theory in dividends from SPYI, which I then can reinvest into more shares of it or move that money around and buy whatever else I want to across my portfolio. Now, like I said, I wouldn't necessarily identify as an income investor, although throughout my portfolio, there's definitely some names that are more income focused. But with names like JEPQ or even SPYI, I also think there's going to be the potential for upside because of the underlying strategy. So now that we broke down everything that I see in SPYI, everything that I see in this more high income ETF, I want to hear from you guys down below. When it comes to higher income ETFs across the entire market, what is your #1 favorite higher income ETF? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.